Good evening, friends. Welcome to Adda 24/7. We are in selection MCQ series for central banking, and today's topic for central banking is autonomy. Autonomy means, is our central bank independent? That's the point. If it is independent, then on what matters is it independent? So it will be mostly a theory topic, and it will be very useful to you because central banking topic itself is theory. Okay. So central banking autonomy and independence generally relates to three areas. Which are the three areas? Means, how can a central bank be independent from the government? Independent from whom? Independent from the government. Okay. So remember, government and RBI. I'll call it directly RBI now. No central bank. Okay. It's one and the same. So RBI and government, these two are different entities. Although RBI exists because of government, RBI's full control is with government, but then also they have been given the autonomy to take their own decisions. So on which matters has government given RBI the freedom? That is personal matters, financial aspects and conduct of policy. On these three matters, RBI has its own internal process, internal way of functioning, and government only sees to it that RBI doesn't go against the common will of the public or common benefit of the public. Okay. So personal independence. It refers to the extent to which government distances itself from the appointment, terms of office and dismissal procedure of the top central bank officials and the governing board. So here the government distances itself. Means what distances means? Government doesn't interfere in the appointment, term of office or dismissal procedure of any top central banking officials. Here it's mentioned top. Top means it is not related to any clerical level. Okay, because clerical level or mid management also, they can take major decisions which can change the entire policy of the RBI. Top management they can take. Okay, so distances itself from appointment, term of office and dismissal procedure. It also includes the extent and nature of representation of the government in the governing body of the central bank. Means how many members of government should be there in the governing body of the central banks. Here, ultimately the main point over here is RBI is owned by government. 100% of the shares of RBI are owned by central government. Okay, but it then also, even though it owns this RBI, but it doesn't interfere into the daily decisions. Okay. Before going ahead, download Adda 24/7 app on your mobile. In this app, you will be getting the premium study material plus live classes, ebooks, tests, everything. Whatever is required for clearing CAIIB, you will definitely get it over here. So that's why download it immediately. Financial independence relates to, now see here, this is the second independence we are talking of. First was personal, now it's financial. Financial independence relates to the freedom of central bank to decide the extent to which government expenditure is either directly or indirectly financed via central banks. Now what do you mean by this? Directly or indirectly financed via central banks. So government, if government wants to do some project, okay, project in the sense road, highways or build any infrastructure, from where will it get the money? That is financed by RBI. From where does RBI finance it? Through the drawdown. Drawdown is one of the important points. Drawdown from the current account. Okay, so it's like an OD, overdraft, taken by the government from its account with RBI. So direct and automatic access of the government to central bank credits would naturally imply that the monetary policy is subordinated to the fiscal policy. What do you mean by this? It means that, look at this. Government is always the ultimate aim. Government is the ultimate thing, and RBI needs to support government. Always remember, government's policy is fiscal policy. Always remember, fiscal policy is by the government and monetary policy is by the RBI. Okay, so always remember one important part. Monetary policy needs to be governed, means needs to support this fiscal policy. Monetary policy itself doesn't have any existence. Its existence is dependent on the fiscal policy. Okay, so it is the subordinate to the fiscal policy. Policy independence. Now this is a third independence. Policy independence is related to the flexibility given to the central bank in formulation and execution of the monetary policy. Means central government has given complete independence to the this Reserve Bank of India for formulation and execution of the monetary policy. Okay, monetary means what? Remember, monetary policy is actually the name is credit and monetary policy. It's like this, credit and monetary. It's like this. It's not actually monetary policy, but we call it in the short term, means the short form. We call it credit and only monetary. Okay. So caution. Given the immense power the central bank has in influencing the economy, a full autonomous central bank can easily design policies to thwart the will of the people. Thwart means go against. Thwart means going against. So central bank can sometime go against the will of the people if it is given complete autonomous. So that's why government never gives complete autonomy. It always has a supreme power over RBI. If RBI tomorrow goes against the will of the common public, or it takes some decisions against the common public, so in that case government can definitely interfere. Means what are the decisions which RBI will take against the common public? Like increasing the interest rates. Suppose if it is not required, and then also RBI increases the interest rates, okay, then what happens? Increase the interest rates. Now what is happening over here in USA? What is happening in USA? The central bank of the USA, Fed, that is going on increasing the rates, and because of that what has happened? The inflation, here it should have been, inflation should have been controlled over there, but inflation is not getting controlled. But it's in the catch-22 situation now. There the inflation is not getting controlled, number one, and number two, the growth is hampered. Because of this hampering of the growth, the banks are failing. Okay, so that's the way. So in such case, when the Federal Reserve takes some decisions against the common will of the public, government can interfere there. Okay. For example, voters elect government to create more jobs, but central bank keeps interest rates high to stifle investment and consequently job creation. So if government is elected to create more jobs, how will more jobs be created? I'll explain you. Say this. Suppose if these are bonds, okay, means let's say interest rates. If RBI goes on increasing the repo rate, repo increase, okay, what happens because of this repo increase? Number one, inflation goes down. Good sign. You will always say, okay, good, very good. Inflation means people will be able to buy, means more with the same money. But there is a negative point to this. GDP will go down. GDP will go down means what? There will be less jobs. So now, why is the government elected by all the people? This is for increasing the GDP so that there are more jobs. But if there are no jobs, because of this RBI policy, it is going against the common interest of the public. So that's why in such cases, government can interfere into the Reserve Bank of India. Politicians can also use the state-owned banking system to benefit their constituents by granting loan waivers. This is one of the important problems in India, right? Loan waivers. Loan waivers. Everyone is getting loan waivers, isn't it? These policies are not inflationary but will also adversely affect the health of the banking system. So the more loan waivers are given, what will happen? The central bank won't have money then, because all the money has gone into waivers, right? So that's why this is mainly used by the politicians during the election time, right? Before going ahead, download Officers Adda 24/7, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the latest updates on JIB and CIB. And number two, you will be getting free YouTube series on all the subjects of CIB and JIB. So immediately subscribe to it. Whatever is available to you free, grab it fast, right? What are you watching right now? You are watching the same free YouTube series on central banking. So similarly, you will get it over for other subjects also. So that's why I would suggest grab it fast. Subscribe and click on the bell icon. Now let's come to some questions. A distinction can be made between the following kinds of autonomy: goal autonomy, target autonomy, instrument autonomy, and limited autonomy. So distinction can be made between the following kinds, means in which type of autonomy there a distinction can be made. So goal, target, instrument, and limited. So it is, what do I say? Distinction. I have to distinguish that this much you can do it freely, this much you can't do it freely. So that will be done in limited, right? Limited autonomy. Goal autonomy entrusts the central bank with the responsibility for determining the monetary policy and exchange rate regime. Simply the monetary policy if the exchange rate is floating. Goal autonomy in principle gives the central bank authority to determine the primary objective from among several objectives included in the central bank law, or rarely to determine the objective if there is no clearly defined objective. So this is given in the preamble also of RBI. So what is goal autonomy? Goal autonomy entrusts the central bank with the responsibility for determining the monetary policy. So it has given the responsibility of executing and formulating the monetary policy and exchange rate regimes. Here exchange rate regime means RBI has to keep the reserves of forex in this present COVID situation and after COVID situation. Because of that Russia-Ukraine war, there was no hyperinflation in India. Why? Because the Reserve Bank had kept a huge dollars with themselves. Because of that, we were able to sustain properly. Okay, or simply the monetary policy if exchange rate is floating. Goal autonomy in principle gives the central bank authority to determine its primary objective. So primary objective of the central bank is decided by the bank itself from among the several objectives included in the central bank law, or rarely to determine the objective if there is no clearly means, or rarely to determine the objective if there is no clearly defined objective means if there is no clearly defined objective of any central bank. It might be there. In India it's not there. In India it's everything is established. Okay, we are a much developed economy, to the sort of developed economy in terms of policies. But there are certain countries where are no clear definitions. In that case, this allows you to clearly define the goal also. Target autonomy also entrusts the central bank or monetary policy with the responsibility to determine monetary policy and the exchange rate regime, or simply monetary policy where the exchange rate are floating. So it entrusts the central bank or monetary authority with the responsibility of determining the monetary policy, right? See here, main aim of any central bank is the monetary policy and inflation. Always any central bank is judged from what? Its control of inflation. If any central bank is able to control inflation properly, then the common public will say Reserve Bank is, or that central bank is functioning properly. In contrast of goal autonomy, target autonomy has one clearly defined primary objective stipulated in the law. So one clearly defined target economy has, and goal autonomy is separate. Just now we saw that. Okay. Credibility of central banks. When the markets have trust in the central bank's ability to deliver price stability, central bank needs to do less to deliver it. Means what? Basically, as I told you earlier, how can you judge a central bank's performance? It's basically inflation, price stability. The more the prices are stable, the central bank is working properly. And conversely, without credibility, more aggressive action is needed to achieve the same objective. Credibility becomes more important in times of high uncertainty, right? Like this Russia-Ukraine war. These are the periods of high uncertainty. This is because it becomes less about specific policies and more about confidence in the policy maker's ability to manage the uncertainty. Okay. So what does it mean? Credibility of any central bank, even RBI, is decided on what factors? Number one, inflation. Very important. Inflation. Okay. Number two, its policies for job creation. Job creation. Okay. But job creation is mainly the job of central government. It's not the job of RBI. RBI has to support the central government's policy. Okay. It has to support it. Got it? It's not the main aim, it's not, see here, job creation is not the main aim of RBI. Okay, but it has to create the policies, monetary policies in such a way that they support the fiscal policies. Okay, so that inflation and job creation, these are the two main jobs. And third job is forex. Forex reserves to be kept as much as required, I don't say in plenty, to be kept as much as required is a prime job of central bank, because this will, if forex reserves are less, it will definitely affect the inflation. Okay, if you are, what happened in Pakistan, what is happening in Sri Lanka, because the forex reserves are very less. Okay, that's why the inflation is huge over there. Okay, a measure of credibility, the way to capture it is by looking at how closely inflation expectations match the central bank's inflation target. Right, means what the central bank has decided about the target of inflation and what the actual inflation is. It's simply that, comparing actual with the target. The closer the two are for a sustained period of time, the more credible a central bank is. Right, means if it matches the present rate and the targets are equal, then it means the central bank was okay. It was wise enough in its thinking. However, inflation itself is also crucial for credibility. If inflation deviates from the target for a longer period, then expectations lose their capacity to convey views on the credibility. Correct? Ways to enhance credibility. Equally important is their commitment to improving the credibility of central banks by consolidating and enhancing their independence. Here, independence is to be kept, as well as through improvements in the timeliness, clarity, transparency and openness in the communication. So this is important for any central bank. Timeliness, openness means it must be able to convey its message properly to the common public. So in that way, what happens, once the transparency is increased, common public also knows what would be the policies of the central bank. Okay. Chalo. So now let me come to the batches. See this. These selection batches have just now started. Join them ASAP. In selection batch, I'll tell you, you will be getting all the numericals, objective questions, case studies, everything is covered. So join them ASAP. All the 4 compulsory subjects are covered. I would say download Adda 24/7 app first. In this app, you are getting here. I'll show you. You are getting this using this code Y432. You are getting huge discounts. But if you are in the app, you are getting 1% extra discount. Let me show you how to use this code Y432. Okay, let's go to Adda 24/7. Okay, so that's why I would say go on the app first. In the app, it's very easy to navigate. So click on JIB and CIB. Click on CIB 23. See this CIB 23. Clicked. You'll see the batches. Click on the selection batch. This is bilingual, English, this English selection batch. Okay. Put the code Y432 in this. Never forget this code. So you'll get the details over here. What are the timings, what are the dates, everything you'll get it over here. Study plan. Okay. Go through the study plan. Study plan is also important. See here, I'll show you one study plan of ABFM. Okay. Look at this ABFM. See this. All the details, dates are given, time slots are given, and what are the classes, that is also given. So once you know this, it is easier for you to study properly, isn't it? Isn't it easier if you know the time slots properly? So that's why these all time slots are given, plus importantly recorded sessions are available. So if you miss out on any class any day, you can definitely get back to it using the recorded sessions. Okay. Now what is the fees? See here, after 75% discount you are getting 5,999, but click on more offers. Put the code Y432. Now you'll see, you'll apply it, you'll see you are getting 77% off. 23,999 reduces to 5,519. Such a huge discount you are getting. Go for it. In fact, I would suggest you have almost 2 months left, 1.5 months roughly. So you can go for Mahapacks. In Mahapacks you are having 15 plus batches. In 15 plus batches, even if you attend per batch, if you just attend the batches, then also it's a 15-time revision for you. So if you get so many revisions, then definitely what happens, it becomes easier for you to attend the exam. Okay, So mock tests are available, everything is available. Now let's look at the fees part again. 8749. Click on more offers, put the code Y432, Y432. Click on apply. Look at this. 77% off. 77% is not a joke. It's a huge discount available. Go for it. And 8049 is the fees. Okay. So very means huge discounts are available. Such things you don't get it every now and then. So I'll be back tomorrow with another session. Till then, everyone keep studying and do join the batches, because the portion is new, exams are nearing, okay, and you'll be needing a guide.